Hello, my name is Sherry McGuire, and I am a non-resident scholar in cybersecurity at the Carnegie Endowment for International Peace. And I'm also the former group CISO at Standard Chartered Bank in London. I'd like to welcome all of you today and our panelists, and thank you in the audience for joining us at the annual RSA conference for this important session on how the SWIFT Customer Security Controls Framework is reducing payment fraud worldwide and keeping our payment networks more secure. For those in our audience who are not familiar with SWIFT, it is a global member-owned cooperative of more than 13,000 customers across approximately 220 countries. And it is the leading provider of secure financial messaging services that includes payment processing at its core. While there is still more to be done, SWIFT and its member financial institutions have made a real difference in raising the bar for security by developing and driving adoption of the SWIFT Customer Security Controls Framework that we're going to discuss today. I'm pleased to say that we have three great experts with us who are going to share their insights and deep dive into the topic of what it is, how it is evolving, and what are the things we can do to proactively and more effectively improve the security of payment networks that are critically important to our national and global economies. In the past year, we've seen continued growth in online fraud, much of it driven by the pandemic, and we've also seen significant growth in and the sophistication of traditional attacks, including ransomware, phishing, and credential theft, to perpetrate fraudulent transactions. But the journey to improve security of the global and interconnected payment infrastructure in a holistic manner didn't start just in the past year. It really started more than 20 years ago. However, it was just 5 years ago that a major breach occurred, and that was the catalyst for change that brought together the financial industry, central banks, regulatory authorities, and payment technology infrastructure providers to improve how payment security would be standardized and evaluated to provide the levels of security assurance that customers and governments worldwide expect. So let's get started with our three panelists. First, we have Bill Hoffman at Deutsche Bank, who is the Regional CISO for UK and Ireland in the Technology, Data, and Innovation Division, Chief Security Office, and the head of the CSO Governance and Control Function. Next, we have JF Legal at JP Morgan Chase, who is the Managing Director and Business Information Security Officer for the Corporate and Investment Banking Division, as well as Global Head of Cybersecurity Operations. And third, we have Brett Lancaster at SWIFT, who is Managing Director and Global Head of Customer Security and the Director of the Customer Security Program, or the CSP. I'm really looking forward to hearing what you all have to say. So without any further delay, let's get started. Brett, let's start with you first. If you could provide us with a short overview of the SWIFT CSP, and then we'll get into the panel discussion with you, JF and Bill. Brett, over to you.
Jerry, thank you very much indeed. If you can bring up the first slide, that would be great. So you're totally right. So SWIFT, just to give a 1 second of background, we are industry owned. We are a financial services cooperative. We don't seek to maximize profit, and indeed, we are not a bank. We're absolutely right. We don't hold accounts. But what we do is connect those little dots that you see on the graphic. So essentially, we are a messaging provider, and the difference between that and the bank is that we will tell you financial instructions as to when you want to make a payment. So we're talking about large institutional bank-to-bank transfers rather than retail or consumer. Yes, 13,000 customers, all the big banks on a global basis, 220 countries. You're totally right. And we do a fair few of these messages, some 8 billion in 2020. The real kicker here is that we have big uptime, so 99.999% in terms of overall availability and in terms of resilience. All the major banks use SWIFT, and indeed that is our raison d'etre. However, you're totally right. In 2016, bit of a wake-up call. It was ground zero for SWIFT in terms of cyber attacks on our customers. And indeed, the Bank of Bangladesh was subject to a well-documented advanced persistent threat cyber attack conducted, we believe, by Lazarus, or more accurately, the Blue Naruf subgroup of Lazarus out of North Korea. Now, the aim of the compromise was to inject a number of fraudulent payment messages being sent from the Bank of Bangladesh to a number of various beneficiary banks. So yes, Bank of Bangladesh was the first attack, that's true, but certainly not the last. And even though the number of attacks have continued since 2016, the overall modus operandi of how these things work hasn't really changed. And I think it's worth spending maybe 30 seconds on how these guys get in and what they do. So the first mile, they get in. Classic, usual way of getting in. One of the usuals is that somebody will click on the link. Typically, unwitting employee of the bank. Once they've got into the email servers, then they will laterally pivot over and find their way to the back office and where the Swift infrastructure sits in and then connects to the Swift network. Once they gain a foothold, then first thing they usually do is can conduct themselves and put a command and control line in so they can talk to their base back wherever they live. After that, the progression laterally over towards the Swift infrastructure that sits in the back office is somebody described as being low and slow. They do not want to be found out. And as they go, as they find out more things about the infrastructure and the networks, then they'll load all sorts of wonderful zero-day malware, so keyloggers and screenshot software, etc. The key, once they find the Swift infrastructure, is to gain valid user credentials. So if I'm an operator of the Swift infrastructure and I want to enter a payment for, let's say, 10 million euros from my bank to your bank, they're looking for the valid ID and password of those users using either keylogging and or screenshots. Once they get that, then all hell will break loose and they will inject a number of fraudulent messages. Could be 1, could be 2, could be 5, could be 10, maybe up to 100. And the kicker here is that each message could be somewhere between 250,000 equivalent dollars up to say 10 or 20 million US dollars. That is the kind of order of magnitude that we're talking about. So this is not retail. This is not end-to-end customers. The typical aim of where these guys are aiming their arsenal is at small banks, and they're typically in high-risk countries, so where the Basel AML country corruption risk index is an 8 or a 9 or a 10 out of 10. It's the same modus operandi, that is true, but the individual IOCs and the TTPs are always different. And for us, it was a bit of a wake-up call in terms of Swift. Sherry, next slide, please. Thank you very much. So in response, Swift launched the Customer Security Program, or CSP. Now, CSP is a multi-year, multifaceted initiative which aims essentially to raise the bar of cybersecurity hygiene for all of our customers, all 13,000. Very easy to say, much more difficult to actually do, and thereby try and reduce the risk of these cyber attacks and also minimize the impact of these fraudulent transactions if they occur. Swift is oriented the whole CSP program around these three blobs. First of all, it's around you being the endpoint institution, such as in the bank. These things could be hardened interfaces, making sure that they are encryption is going, or making sure that we can respond to the incident. And at the heart, there are a bunch of security controls, as well as how the customer then attests and complies against them. That I'll get to in a second. We also have independent assurance and also supervisory reporting. Those are core. I'll get to those in a second. The second blob is around your counterparty. So we realize that the endpoint institution, the bank in this case, does not operate in the vacuum, and they send these transactions from one party to another. So how do we do counterparty risk management? How do you know whether the counterparty you're dealing with indeed is cyber secure or not? And then the third of the blobs is around the community as a whole. So intelligence sharing, how we engage with the market and how we engage with pan-industry initiatives. Now, at the very core of CSP are these set of cybersecurity controls, which are really aimed to protect the Swift infrastructure that then connects to the Swift network that you saw on the previous graphic. These are all based on NIST, ISO 27000 and PCI DSS. A few little tweaks to make it specific for around Swift, but essentially all of our controls map back to those three, and you can do those on a one-to-one mapping. So the controls are split into ones that we define as being mandatory, i.e. the customer has to not only attest but also comply with the mandatory control, and also ones that are advisory. And they're all oriented around 7 different themes in security. So network segregation, reducing the attack surface, physical security, protecting credentials, managing identities, detecting anomalies, and incident response. And over each year, every customer has to attest their level of compliance against these controls. And as time goes by, we look to raise the bar by either adding new advisory controls or by promoting ones that were advisory into mandatory. Next slide, please, Sherry. Thank you very much. So this is a simple graphic that tries to show the evolution of how we have compliance across all of our 13,000 customers. So back in 2017, where it's all in red, we had 27 controls, and we asked all our customers to simply attest but not necessarily comply by the end of 2017. Now, across all our customer expectations, the result was a compliance level per control of just under 77%. And that then increased year by year to over to the right-hand side, where we have in January of this year, 2021, an overall compliance of 97% per control. It gives you a very simple depiction of those categories as to where compliance lies. So for me, these colored hexagons try to show that we have an engaged community, and indeed we're trying to show that the community has got an uplift, and indeed they are starting to comply with the controls and hopefully starting to make a difference. That's a very quick intro. I don't know whether I'm in or out of my 10 minutes, Sherry, but back to you.
Perfect. Well, thank you so much, Brett, for that excellent overview. I think it really demonstrates the starting point of the program and to where it is today, and the way that it is raising that bar, as you said. So let's get into the discussion part of this session, which I think will really hopefully bring out some points around both the challenges and the opportunities that have emerged and are continuing to emerge as this program continues on in its overall longer-term strategic journey. So let's start with the first question. Is the SWIFT CSP making a difference? And if so, how? And really, can any of you talk at all about how it's impacted or reduced payment fraud against financial institutions or the sector as a whole? What are some of the indicators that you're seeing that it's really doing the trick?
Well, maybe if I start, when you look at Brett's diagram, right, we're seeing adoption. We're seeing organizations demonstrate compliance to the controls. But a lot of organizations were already doing this. And I think a lot of the value here has been the engagement between cybersecurity organizations and the business. For me, I've been having conversations with our clients over the years. It used to be that I'd walk into a session with my colleagues in wholesale payments that handle financial messaging, and it would only be the counterparties. It would only be the treasury leaders. And now what we're actually seeing is participation from the cybersecurity organization. And it's actually created this crossover where we have some wholesale payment teams that are extremely well-versed in cybersecurity. They're extremely well-versed in fraud, right? And this is just another aspect of fraud. I don't want to minimize it, but we were dealing with business email compromise, malware, and then you throw on compromise of SWIFT endpoints at financial institutions. And it was, how do you bring together cybersecurity controls and payment controls, right? Historically, you had one side of the house in many, many organizations that were solely focused on the cyber controls, and the other side that were solely focused on the transactional controls. And now what you're actually doing is you're using cybersecurity information and coupling that with mitigation controls that exist in the business and vice versa. So when you become aware of a potentially compromised counterparty, well, it's not about shutting down circuits. It's not about anything like that, right? It's using circuit breakers like disabling RMAs to prevent money from moving until the organization's actually had an opportunity to attest or confirm that they've done that kind of validation, right? So for me, a lot of the help here has been bringing together the business side of the house and the technology side of the house and the cybersecurity side of the house into a common baseline set of terms and language that we can all work towards.
Yeah, I would agree with that, JF. It's interesting. We didn't compare notes on that before, but I think that's certainly our headline topic. Anytime security gets a chance to sit around the table with the business and with technology, helps drive that cultural shift in our organizations that kind of raises the bar, to use Brett's term from his presentation. I think also thinking about not just the internal view, but also outside of our organizations, right? I think the large banks are used to collaborating with each other on cyber topics. What the framework does, though, is it creates an environment where we have banks of different levels of maturity that are spending more time collaborating with each other as well. Right? We're all working toward a common standard. There's mechanisms that allow us to share information with each other, and it opens the door for more of the community to collaborate on reducing cybersecurity risk across the entire ecosystem.
I think, Jerry, just one thing to add in terms of making a difference and a kind of overall effectiveness. We have seen, I mean, we've been now going for 5 years. We have seen a drop in the amount of funds that these bad guys get away with. So year by year, from the funds attempted, which they'll always knock on the door, and you can't really stop that. But we've definitely seen a reduction as our customers having implemented these controls. We've definitely seen the amount of money that has gone out the door gone down dramatically, and it's a testament to, as you say, engagement from the community. But we're not done. We are by no means done. There's always going to be more stuff to do. And these guys are pretty smart. They learn and they evolve. And then we need to kind of keep half a step ahead in this sort of arms race.
That's a great point, right? Like learning from the attacks, continuing to monitor adversary TTPs, and not skipping ahead. I think it becomes even more important to keep the controls up to date with the activity that we're seeing. You were talking about the advisory controls and adding them, but a lot of that comes through dialogue and the exchange that results from CSP.
Maybe we could pivot off of that comment, JF, around the keeping the controls up to date. I think this is a particular challenge that organizations face, especially with the rapid digital transformations that all financial industry and beyond are experiencing, in particular this past year with that acceleration due to the pandemic. Can any of you talk at all about some of the challenges making that shift with the business, both from a cultural standpoint as well as from a technology perspective, making that shift from being that focused on the transaction controls to now having to shift to be more inclusive of other cybersecurity, fraud prevention, other risk controls that we would implement inside large organizations? What are some of the tips you might give to others who are trying to manage through that challenging, sometimes, business culture of making those kinds of changes? Anyone want to comment on that?
Yeah, I can share some thoughts on that. I think number one, as security practitioners, obviously we've got an obligation to protect our organizations, but we also have an obligation to our business, right? We're there to protect the business, but we also need to recognize that we have a role to play in preserving the velocity at which our businesses are moving, right? And I think historically there's always been this tension between business and security. The security office is going to say no, so the business is not going to tell them what's going on. And I think over the years, we've realized that, and certainly building off of the experience of CSP and some other examples, when we work together on an initiative from the beginning, and I don't mean, pre-go live, I mean when we're talking about the earliest conception of a new business priority, a new business product, a new business flow, it allows us to better design and integrate security from the very early stages of that project, right? The worst thing that we can do is try and retrofit a security architecture around a product right before it's supposed to go live. And so, the more we have these opportunities to work together and increase the level of trust between security practitioners and the business, the more contacts we have, the more likely we are to hear from each other, when we're working on something new that could have an impact. At the same time, we are also innovating in the security space, right? And that gives us opportunities, especially the better we know the business, to figure out, hey, how is it that something that we're doing, maybe in the case of digital identity, can actually facilitate the business and solve a problem that they've been kind of struggling with or been creating friction in terms of the business environment. So again, having that open relationship and that existing network allows us to better support the business and protect them as well.
Great.
Yeah, I think you hit the nail on the head, right? The enablement component of cybersecurity has become critical. It's no longer about saying no. It's about saying how. It's about anticipating business needs, but it's also about exposing the threat landscape, right? I spent a lot of time with business leaders talking about the threat landscape, sharing examples of what happens when there are issues, and we had a whole slew of examples since the pandemic began of organizations that made the shift way too quickly to work from home, exposing RDP servers, exposing single factor VPNs. And what's become important is that shift from what I would say like cybersecurity incidents to resiliency. Meaning, how do we look at this end to end to ensure, right, like the 5 nines, as Brett was mentioning, for money movement? How do we ensure the availability, the resilience of the entire sector? And that includes the financial institutions, includes a service provider that provides services to other financial institutions, ensuring that there is a lens on that availability aspect. It was mentioned ransomware as an example. Ransomware isn't what we're going to see that directly affects payments, but it's part of the scorched earth strategy that's often employed by an adversary to hide their trails. Or some of these, remote access, and we're seeing adversaries selling credentials on the underground that are subsequently used to breach networks. Well, it's a lot easier to get a foothold when you don't need to breach the perimeter first, and you actually have remote access. So it's thinking of how we take away that first step, that first aspect in the attack path that an adversary would use to breach a network and ensure the availability of the sector, right? Because our job is to make sure that payments are confidential, that there's integrity, but there's also availability. And it feels like the A was forgotten for a lot of years by cybersecurity, right? And now we're bringing back that concept of operational resilience, looking at the end to end and making sure that organizations can continue to operate. So it's, as we evolve, it's considering that threat landscape and seeing how we have that communication with our business partners, with industry around the availability.
And indeed, even designing the CSP controls as they are now and how they evolve, we could not do it without a fully grown up conversation with the business. So they want to go down APIs, they want to go down real time, they want to go down cloud, they want to go down, and all these things, you have to kind of make sure that whatever controls you have, it's going to make sure that you're insulated from whatever the crazy business things that they're going to go and dream up, and whatever you have, you're going to fit the bill. Easy to say again, very difficult to actually do.
But I think that was one of the good things about CSP is it was driven by outcomes and not prescriptive controls. So it's a lot easier to evolve with an outcome than a prescriptive control. So as platforms change, as you mentioned, right, exactly. APIs, the cloud, the outcome is still the same. You don't need to dictate the prescriptive control. And I think that was one of the successes of CSP was that language that was used, because every financial institution is different. And we've seen other frameworks be incredibly challenging because they're so prescriptive, right? That's what made it adoptable in a short period of time.
Well, let's talk about that outcome-based resilience or risk reduction. How do you all see, and maybe Brett, we can start with you, how has SWIFT changed the landscape for counterparty risk and resilience and intelligence sharing? Those counterparty risks, we take those on as large institutions oftentimes and don't oftentimes have a clear view into what their levels of risk or resilience are. Maybe you can talk some about how this has helped create more trust in the overall ecosystem.
Well, I don't think we're there yet totally with counterparty risk management in terms of change the landscape. I think changing the landscape, this is a bit of a conversation, a bit of a journey. I think the first thing we realized at Swift, look, we're not the policeman here. All we can do is give the tools to our counterparties and our community and let them decide. So first decision was to give them not just the facility that they can actually go look this up, but then the ability to ask a counterparty, hey, I need to see how you're doing against those controls. Are you compliant, not compliant, or are you still kind of working on them? And that suddenly changed the whole conversation, because then you have all the information in the world, very, very granular, the information around whether these guys meet these controls or don't meet these controls. And then they can make a risk-based decision, combine it with their ERM systems, and then off they go in terms of whatever remediation measures they want to take. But it's their decision. It's not Swift's decision, or it's not the supervisor's decision. It's their decision as to how they're going to manage their counterparty risk. It's a conversation which we have not yet ended. I think some are very, very mature. I would say Deutsche Bank and JP Morgan Chase, very, very mature in terms of their outlook and without, but we have a whole long tail that can only just manage to attest and comply, let alone then get to counterparty risk management. And I think that's the next chapter for us.
Yeah, definitely. Yeah. I think that sorry, Jeff, I think that is the hardest part of the program, right? Is that we have access to information that we've never had before. Large volumes of information about our counterparties, about their control environment. And now what do we do with it, right? It's like the dog.
Exactly.
So, exactly. And it's interesting because we compare this to other types of risk that we're used to managing with our counterparts, right? So credit risk, we're banks, so we're very used to kind of evaluating credit risk and making decisions off of those. And although it doesn't work perfectly, I think there's a model there that says, okay, we've got very specific data points. We can use that to benchmark against different classes of counterparts that we deal with. We can benchmark ourselves because we know where that kind of fits in. But there definitely is room to grow in that space. And I think that clearly is the focus for the evolution of the framework, in addition to kind of the continuous improvement on the controls.
Yeah, and it's considering all aspects of counterparty risk, right? So looking at multiple facets, credit risk or country risk or the likes, as part of decision making. So it's not relying on a single set of factors, right? So it's not a binary yes, no decision. It's looking at all of the elements of data that are available to us. But it's also, one little or less spoken about, like the Swift ISAC, right? It's the intelligence sharing, it's the communication between the organizations that has stemmed from this, whereby if there's an ongoing issue, there is communication across the sector around that. There is an element of information sharing. There is information available to Swift members if there is such an issue, so that, organizations can take the mitigation steps to reduce the risk. So I'm always thinking, like, how do you prevent it from happening, but also like, how do you mitigate that risk once it materializes? And the Swift ISAC has helped with that aspect as well.
I think information sharing is totally key. And even back on the counterparty risk management, I know that, Bill, we're working with you guys on an ebook white paper just to answer that question. So you have all this data. What the hell do you do with it? How do you then crunch it and work out what your remediation steps are? So I think this is a constant evolution, not just in terms of the controls, but also in terms of people's awareness. Make sure the education is there. Make sure we as Swift are engaging with the community. And if there is, the beginning of a learning curve there, then hopefully we're out there with white papers and so forth to help that education. I know, Bill, you're very, very keen on this stuff because you're quite mature.
Yeah, I think, look, I think the important thing here is that the ability to do that type of counterparty risk assessment shouldn't be limited to the very mature, very sophisticated banks, right? We need to find a way to kind of drive this rising tide concept with this, so that the methodologies that are used, and I'm not implying that they need to come from the large banks, right? Any methodologies that can be used to help improve outcomes, help address counterparty risk. Again, to JF's point, we've got great opportunities to share them with each other. And I think the ebook that you've described is one example of that. But we're keen to hear any innovation across the space to understand how better to use this information to address the risk in our own environment and across the sector as well.
Yeah, so this is a really great point I want to draw out here, because this is, when we get to the core of it, really standard third-party security risk management. And we've seen a big push recently, given the recent SolarWinds breach and a few other big name ones in the media, especially. Big push now by boards and executive teams around third-party security risk. And certainly that's not a new topic for us in the cybersecurity field or in the financial industry. I wonder if you can talk at all about maybe some of the lessons that could be applied from the CSP that have worked around that transparency and visibility of being able to see the control posture of counterparties, maybe how those might be transferable to other types of third-party security risk management functions.
Thinking about that one a little bit, overused term, but ecosystem, right? So one part of the ecosystem goes down, has ripple effects on a number of organizations, right? It could be an organization, a service bureau that's providing Swift connectivity to smaller financial institutions. It could be an outsourced technology shop. It could be telecom links. It could be a number of things. So managing that third-party risk, whether it be for payments, markets, or any other area in retail banking, has become more and more essential. I talked about availability and resiliency. I think 2020 was probably the year of the ransomware. We saw so many of these events, a lot of organizations being held hostage and for ransom. And that has a downstream impact when these organizations are service providers. And there are a number of frameworks out there for assessing third-party risk. There's a number of organizations that specialize in that area. But again, it comes back to how are you managing your own risk? How do you build your counterparty, your third-party risk framework? But it's also about learning and evolving, right? What are the key factors that contribute to these attacks on third parties right now? How are we risk rating our third parties based on the services that they provide to us? And how do we feed that into a feedback loop, right? So as the threat landscape evolves, what questions do we ask? What questions change? And how do we analyze the information and scope these vendors, right? I think you mentioned, an attack on the supply chain. So how do you go back to vendors and go, well, what are your controls around your SDLC? What are your controls around your software pipeline? So that if you suffer a compromise, I know I'm not ingesting malicious code. But also it's up to organizations to build controls around that and scanning code as it comes in and doing those types of validations. So there is a continued evolution based on that threat landscape, based on the controls you need to implement. And sometimes I'll go into conversations, it's like, okay, well, can you give me a list of the controls I need to implement? I'm like, it's going to be good today, but we're tracking adversaries and it's going to change. There will be something new, but a lot of this is good hygiene for many organizations, right? Like single factor VPN that was set up as a result of COVID because the organizations didn't have enough secure IDs to hand out to everybody. And then all of a sudden somebody forgets that it's there and it hasn't been moved to MFA once they have enough. So it's also about good risk management and ensuring that our third parties have those processes in place where they know how they're managing their risk.
So let's talk a little bit further about how do we ensure, what does that look like, that community compliance, the assurance, and of course what follows on that always, which is, at least in the financial industry, supervisory enforcement. What do you think that security and IT vendors should think about all of this? And they often have a different lens, being mostly on the unregulated side, and how do they factor into the overall CSP model? Maybe Brett, you could kick us off on that one.
I think you've hit a number of points, but I think regulatory, supervisory, superintendents, having them in the mix at the beginning of the equation for CSP was one of the big decisions we made. You know what? We can't be the policeman. If these guys don't comply, then we have to give them to a jurisdiction that then can sort it out. And I think that was one of the big decisions. To have a stick, to have enforcement, suddenly lubricated the wheels and the cogs here, and you could see then actually we have a lot of compliance, as you saw from the hexagon diagrams earlier. And I think that was one of the pivotal decisions that we had. How that translates to third-party vendors and suppliers, that's a challenging one, because you quite rightly say, we are regulated for good or for bad in the financial services, but those guys aren't. And how to have that level of stick, but without the governance structure around it, that's a challenging one.
Yeah. Well, let's talk. Let's go to our last question of the panel, which is, how should the CSP evolve? What direction do you all think it should move in the future? And should it be expanded to other critical systemic functions within financial institutions beyond? Could other organizations adopt the CSP for different critical functions that they provide? What are some of your thoughts about that? Who'd like to go first?
Maybe I'll start with that. So I think in terms of the evolution of it, there's a real opportunity, and we kind of talk a little bit about this, right? There's a lot of frameworks out there, right? Brett already described that, it's traced to NIST, it's traced to ISO, it's traced to PCI, right? So I think there is an opportunity to start to look at these frameworks and figure out, how do we start to bring these closer together, right? Across the financial industry, there's an initiative called the Cybersecurity Profile, which is looking at the various kind of compliance controls and indicators that we would expect organizations of, again, various maturities to have in place and comply with. And I think the more we can look at either whether they're regulatory frameworks, whether they're industry frameworks, whether there's something like the CSP, if we can start to bring these together, the cost of compliance, and in fact, the cost of demonstrating compliance, goes down significantly, right? And the less that we're spending on that compliance demonstration is more that we can put into security and cyber risk management. I think the second opportunity, and this is picking up on a point that JF talked about, was around threat, talking about threat, right? The more we can use frameworks like this to talk not just from a compliance perspective, but from a threat perspective in plain language that non-security practitioners can understand, again, that facilitates the advantage that we get from leveraging a framework like this, and particularly leveraging SWIFT, who sits at the center of so much of the financial ecosystem.
I think you covered it.
Yeah.
I don't really have anything to add to that. The alignment is going to be critical, right? There's so many different frameworks out there. You mentioned the financial sector profile. I think bringing it all into one common lens is much more effective for organizations, especially organizations that have a large international presence and that are seeing, various requirements placed out to them that slightly differ, that are a little bit more challenging to meet at times. So if we bring it all back to one thing, the evidencing becomes much more effective, and we get to spend more time on control design, right? So the more alignment we have across these frameworks, the more investment we can put in control design, but also in continuous control monitoring. So demonstrating that the control efficacy is working as planned. So it becomes much more effective to evidence this and validate that we are aligned to the controls that are being proposed.
Yeah.
Great. Well, I want to thank all of you for the great discussion today, and just say that this concludes the recorded portion of our discussion, but I hope all of you in the audience will stick around for the next 30 minutes immediately following, where we will join you live to continue the conversation and answer your questions. So thanks for joining us, and see you in the next session.